In this video, we'll explore the differences between the relative to market and relative to itself modes, and demonstrate how these views can help you spot important trends and outliers. Let's start with the relative to market mode. As you can see, this screener shows the open interest for various tickers relative to the entire market over the past 3 months. While this provides a broad market overview, it can sometimes be challenging to identify coins with rising open interest or highs and lows for specific assets. This is because the open interest for major coins like BTC and ETH is so high that it overshadows all other tickers, making it difficult to spot significant movements in smaller coins. Now, let's switch to the relative to itself mode. This heat map normalizes open interest data for each coin, showing changes relative to their own historical data. This mode highlights individual spikes and drops more effectively. For example, take a look at the ticker AXL. Notice the recent rise in open interest, indicated by the brightest colors on the heat map. This spike suggests a significant increase in interest relative to its historical data over the past 3 months. To further illustrate this, let's view AXL on the chart widget and select the open interest indicator. As we can see, although the open interest for AXL is relatively small compared to the entire market, ranging around 5 to 10 million, there's a noticeable spike from approximately 4 million to 11 million in just one day. This is one of the largest increases in its history. This example demonstrates how the relative to itself mode can be an effective screener for identifying coins that exhibit significant changes compared to their own historical data, rather than the market as a whole. By focusing on these outliers, traders can uncover potential trading opportunities that might be overlooked when only considering market-wide trends.